Hey YouTube family, Mike Jones here, back with another video on my channel. On my channel we talk about all things investing and finance with the hopes that we will be able to inspire someone to go ahead and start their financial journey today. With that said, today is just going to be a Robinhood portfolio update, and we'll go into a little depth about a couple more stocks that I have in my portfolio. So we'll go ahead and start revealing all of that right after this. Okay, welcome back YouTube fam. So I'm gonna go ahead and get started on exactly what is inside my Robinhood portfolio, and I'll update you on the value of my total portfolio today. I think I'm gonna start making it a regular occurrence where I give you an update on Fridays after 5 so that you can see just exactly what's going on with my portfolio on a consistent and weekly basis. And I say 5 because in Pacific time, the market should pretty much be closed. Okay, so without further ado, let's go ahead and get into it. Also, if you're new to the channel, make sure you go ahead and smash that like button and subscribe for me. And if investing is something that actually piques your interest, I highly recommend going ahead and hitting that notification bell so you never miss out on another video. If you're already a part of my YouTube community, go ahead and make sure you comment down below to make sure I know I'm doing a great job. Alrighty, so let's go ahead and get right into it. So as I open up my Robinhood portfolio, you can see right here that we are at $23,061.19 by the end of today. As you can see, we gained 2.17% back today in the regular trading hours, and we lost 0.11%, which is about $25.51 lost, while we have $489.49 gained, bringing our total to about $464 roughly. For the week, it's gonna be rough. I'll just let you know right now. For the week, we are up $29.80, which is about a 0.13% return, or 0.13% return in the past week. In the past month, we are down $1,033.84 with negative 4.29% for the month. When we go to our 3 months, we have $2,691.84 gained over the past 3 months at 13.22%. And for the past year, which is only 6 months, we are up $4,941.79 with 27.27% gained. And this is after losing that over $1,000 in the market. And all time, which is only like a week more than my 6 months, or like a month more than my 6 months, so about 7 months. For the last 7 months, we are up $4,939.86 with 27.26% all time. And that's just in 7 months, so not too bad. When we look down here, we can see that Nikola is down, or is up 2.72% to 19.99 in after hours, and that's because there's a lot of news on Nikola that is causing people to sell right now. I actually think they're in a lot of trouble, so we'll see what happens with them going forward. We have, American Airlines, which is up 2.52%, and is up to $12.60 in the after hours trading. Genius is down 2.40%, and the value is about $1.22 in the after hours trading. And we'll just delete or get rid of the rest of this. Whoops. We'll get rid of the rest of this and get started. Our call, let's just see how that's doing. Our call is at a loss of 30% right now. So we're not really worried about this because the expiration date on this is not until September, or wait, is not until January 21st of 2022. So we have literally a year and a half to get to that break-even point, which is $55.13 for break-even, and anything higher than that is going to give us more profit on top. But like I said, we'll go into an options play and how that all works, and I'll explain that all to you in another video. With that said, let's go ahead and look at where we are. Last time I went over GE, GoPro, Wheeler Real Estate and Investment and Trust, Ford, Fitbit, Washington Prime Group, Waste Management, GM, Verizon. I talked about AT&T. I talked about the free stock that I got. I talked about, I don't think I talked about Vanguard. So here is Vanguard. VOO is the ticker symbol, and it's Vanguard's S&P 500 ETF. And today it is up today it is up 1.60% with a gain of about $5 on the day. And we bought this share at an average cost of $238.48. And now the market value is $304.88, which means we've gained $65.23, or about 27.22% over the course of the time that we've had this stock. Moving on, we have Apple as the company that we left off on, because last time we talked about Amazon. And as you can see, Amazon is $112.24 at the end of the day. It gained about 3.75% on the day and is up about $4. I have 16 shares at an average cost of about $90.69. Apple is like pretty much always going to be a buy for me. So if I had the funds, I would be putting even more money into Apple. Right now it's a little down after the split, but we don't worry about that at all. We still have gained about $345.30 in this account, which is equivalent to about 23.77% so far. And yeah, Apple also gives a dividend, which I think is really awesome, and they are almost at a market cap of $2 trillion. So they're a really, really solid company. And their PE ratio is, between 32 and 33, which is really awesome. And I just don't see why people wouldn't buy Apple. It says right here that the fair value is $71 a share, which I don't believe that. I think Apple is worth about $200 a share, but we'll see how it goes. I know that no matter how long I have it, it's gonna be like one of the longest plays in my whole portfolio. So I'm really not worried about it. Moving on, we have a company that we bought one share of this. This is Kinder Morgan. And again, this is another company I just bought because I liked, it was pretty much instinctual. It's basically in the energy sector. It deals with like petroleum and oil and carbon dioxide and all that kind of stuff. So I thought it would be a good buy. And over the time that I've had it, I bought it for 25 cents is how much I bought this company for. And in the time that I've had the company, it is up $12.36 with a 4,755.13% return. I'm gonna go ahead and take a screenshot of that because I couldn't have thought that I would have never thought that this company would have got to this point, but that's pretty awesome. My next company is Moderna, and the reason I bought this company is because I thought it had the potential to become a very solid pharmaceutical company. At the time during the shutdown, as you know, pharmaceutical companies were highly in demand and people were just buying and buying and buying pharmaceutical companies, and I just, did a little research on this one, and this is the one that I felt safest about, or the one that I liked the most out of all the ones that were there to pick. Because most of them at the time at the pharmaceutical companies were either, $500 and up, or they were penny stocks. So I thought this was a good buy. Since I bought it at an average cost of $47.42, and the total return so far is $21.77, with a return of 45.9%. As you can see down here, it doesn't have a PE ratio or a dividend, so the market cap is safe. But like I said, I did a little research. I didn't do extensive research on this, but it's paid. But since I've had it, it's done what it needed to do and made some gains since I've had it. So I'm happy with that. Moving on, we have Viacom CBS, ticker symbol VIACA. So I believe this is a Class A share of Viacom, because in my Weibo account, if you looked at that video, which I'll go ahead and link here, it was VIAC. But anyways, it is at a market value of about $31.78 a share on the day. As you can see, it gained almost $1 today, and I have a dividend coming for it of about 96 cents, and that's because I have 4 shares, and every quarter it's going to give me 24 cents per share, so that's 96 cents. You see, I bought it at an average cost of $24.81, and since I've had it, which has not been very long, it's gained about almost $28 or 28%. And so moving on, we're gonna go ahead and talk about another solid company, at least in my opinion, a solid growth company that you may consider getting in on, and that's Lockheed Martin. This is a Fortune 500 company, and on the day it gained about $6.70, and I also have a dividend coming for this of $4.82. As you can see, I have 2 shares, so if you split that in half, that's how much it gives you every quarter, which would be $2.41 a quarter per share of Lockheed Martin. And I bought at an average cost of $374.33. This is a very long-term hold for me, and I plan to buy more when it decides to dip or whatever. And we have gained $22.45 since we bought the company, or about 3% return. Next company we have is one share of Facebook, which we bought at $210. I didn't get in on Facebook, unfortunately, when it was at a low. It was still low compared to what it's been, but I just wanted to get in on Facebook because I know it's going to continue to go up. On the day, it has gained almost $5, and it is at $254.30, which means that we have gained $44.30 since we bought it, or about a 21% return. McDonald's is the next company that we bought, and it is up $2 today, and it is $218 per share currently. I bought it at $180.05, and it has gained me $38.16, or 21% since I bought it. McDonald's is a no-brainer. It's one of those companies that you definitely want in your portfolio. I know that a lot of people are very weary of customer service or food stocks, but McDonald's is one of those surefire stocks that you should definitely have in your portfolio so you can be diversified. Moving on, we have Pepsi, and I have 2 shares of that, and as you can see, it's prepared to pay me a dividend of $2.05, which means that its quarterly dividend per share is $1.02 roughly. And It gained about $2 today, and it is at $133.91 on the day. And I bought it at $133.05. So we haven't gained much on Pepsi, but it's another solid company, and a solid beverage company if that's something that you're thinking about. So definitely stick around for, you know, more beverage companies like this. I do have a good amount of beverage companies in my portfolio. The next company we have is Disney. Everybody loves Disney and all their Disney remakes. Personally, I'm a fan of the classics. My favorite movie is Lion King, but that's off topic. So on the day, it's gained $1.20, and it's $123.70 a share after today's run in the market, and we bought it at $103.49. And I think that Disney's current value is a fair price, but I haven't had the funds to go ahead and buy some more of Disney. I've prioritized other things, and so yeah, I will be buying more of Disney, but not right now. Since we've had this stock, it's gained us about $20.21 and about 20% return. If you'd like me to go into depth about these companies, please comment down below so that I know that you would like individual analysis on some of these companies, and comment which companies that you would like me to go into an analysis on, and I can make videos for that. More commentary, the more I know exactly what my audience is looking for. So next company is 3M, and as you can see, it's down 40 cents today, but it's $160 a share right now, roughly. And we have one share, and we definitely want to buy more shares, but we bought our share at an average cost of $146.57, and it's about $13.57 since we've had it, or about 9% return. So for those who don't know, 3M makes masks, and so they've probably, you know, made a ton of money over this this pandemic time. So they're definitely a company I would consider getting into. As you can see, they have a dividend yield of about 3.67%, and they have a market cap of 92.3 billion with a PE ratio that's very safe. Even though, you know, the analysts in Robinhood tell you not to buy it right now, you know, just hold it, I would still buy it, because, you know, over the long period, and we've talked about this before, over the long period, you know, dollar cost averaging is going to get you the best price for your stocks. So worrying about the price of the stock is not something you should do unless you truly feel that the stock is overvalued. So moving on, we have Microsoft, one share of Microsoft, which we bought at $183.48 during the dip, and it's gained us about $23.63 with a almost 13% return. Microsoft is another no-brainer that everybody should probably have in their portfolio in the tech sector. Apple, Microsoft, you know, Google if you can, Amazon. These are companies that I would have anchoring my tech sector. So we're gonna talk about a couple more companies, and then we're gonna go ahead and probably close out. So the next company we're gonna talk about is Tyson Foods, and I bought one share for $55.22, and during that time it's gained $4, or about 7%. Tyson Foods is another company that offers a dividend it has a dividend yield of about 3% with a safe PE ratio, a great market cap. If you look at the analyst ratings, it says 57% buy, but as I've said before, I wouldn't go by Robinhood analyst ratings. I would do my own due diligence and make sure that you know what's going on with the stock. But as you can see, it has 0% sell, so Obviously, it's a super solid company because, you know, no one's saying you should sell it. It's a definite buy. So the next company we're gonna go ahead and talk about is one that is a bit of a spec play for me, which means that it's more speculation than it is based off of the balance sheet and stuff like that. I just like the company overall, and that company is ONEOK. I don't know if I said that correctly, but they deal in natural gas and pipelines and stuff like that, and I figured they're pretty essential, so I would go ahead and grab 4 shares of that. And I have I have 4 shares at an average cost of $32.19. Now, obviously, we're down $29.14 in this stock, and it's down about 22% negative return. But if you look at their growth chart, after 1 week, it's down about 5.37%. 1 month, it's down 8.12%. 3 months, it's down 20% practically. A year, it's down 65.88%. 5 years, it's down 30%. So what that means is, if you look at the year, it's a greater loss than the 5 year. So this company, before everything happened, I would say that it had gained about 35% over the last 5 years, which gives you about 7% growth every year. And before the pandemic, you know, this was a solid company. So I fully expect that when the economic crisis, plus the pandemic, plus all the political stuff that's going on, all that settled, once that all, you know, the dust settles on that, I fully expect this company to be back up to about $70 a share. And so I'm holding until that happens. I bought this, you know, only a couple months ago, so I'm not really hurting by the $29.14 that it's lost. As you can see from the PE ratio, it's a safe PE ratio of about 17 or 16, and the dividend yield is something that should be a red flag though, because 15.16% dividend yield is absolutely insane. But I see this more as a growth company, so the dividend, whether I get it or not, doesn't really bother me. And the market cap is pretty safe as well. So we'll see what happens with this company, but I thought I would reveal that to you. The next company we have is Coca-Cola, and I am extremely bullish on Coca-Cola. I hope to get to a point where I can buy, for every 1 share of Pepsi that I have, I'm planning on buying 3 shares of Coca-Cola. And so right now, well, let's start with the fact that Coca-Cola is going to give me a dividend of about $2.05, and that's based off of 5 shares, so about 41 cents a share is what I'm getting a quarter. And with my 5 shares and an average cost of $47.60, we have a profit of about $4.49 with about a 2% return. And I fully expect that from Coca-Cola. They're just a super solid company. They're worldwide. Everybody knows who they are. They have a dividend yield of about 3.36% with a very safe PE ratio of about 23, and then their market cap is $209 billion. So I don't see this company going anywhere. If you look at their 5-year chart, even with everything that's happened this year, they have averaged about 5% over the last 5 years, and I fully expect them to double by 2022. So we'll see what happens. The next company we're talking about is Pfizer, and Pfizer is another company that I feel is extremely solid. They deal in healthcare, vaccines, they deal in consumer healthcare, vaccines, and medicines, and so I fully expect that Pfizer will continue to keep on chugging. As you can see here, the analysts say that it's a 50% buy, 50% hold. So they're not sure if you should buy or hold, but they know that you should do both. So definitely peep that. As you can see, their dividend yield is about 4.17%, and their PE ratio is extremely safe at 15, with a market cap of $200 billion again. Now we do have a negative return on the one share we have. It's down almost $3 with almost 8% loss, or 7% lost, but we don't care because we'll be buying more shares of Pfizer in the near future. And then we have Simon Property Group, and Simon Property Group is a real estate company, actually a REIT, which is one of my favorite things to buy. And they deal in buying like malls and such, and they've been making a lot of acquisitions even during the pandemic, and they're actually down $90.74 a share right now, which is about almost 60% loss for the year. In the last 5 years, they've lost 65%, with $120.84 loss per share. But I fully expect them, once the dust settles, to go ahead and have a strong performance and a couple strong quarters that'll get them back to that 100 to 150 range per share. So the fact that we bought them at an average cost of $63.69 doesn't bother us at all, because there's potential to make about $500 here. Now, before buying this, I would absolutely emphasize going ahead and doing your own research, because at the end of the day, I'm just a YouTuber, and these are things that I'm buying, but just because it works for me doesn't mean it'll work for you. So definitely do your due diligence. I will always say that after everything. Do your due diligence. And so we'll stop it right here with MetLife, which we have one share of at an average cost of $33.48. So we have about a $3 return with about 8% gained. And the dividend yield is super awesome at almost 5% dividend yield. PE ratio is 5, and the market cap is 32 or 33 billion, with Robinhood even giving a 62% buy rating. So I definitely want to get some more MetLife. I do tend to like insurance and financial companies. They for whatever reason, I have an affinity for them. So I just want to go ahead and thank you so much for watching this video. If you enjoyed this video or you got some value from this video, please go ahead and smash that like button and subscribe. And if you're new here, definitely go ahead and hit that notification bell so you never miss another video. That said, I do have useful links down below that you can go ahead and use, like my Webull and Robinhood links and my M1 Finance links, and that's a great way for you to go ahead and support the channel if you want to. I do want to say that I am not a financial advisor, and any and all information in this video should be seen as educational and for entertainment purposes, and you should do your own due diligence. You should speak to a licensed professional before going on with making investment decisions. So with that all said, thank you so much for watching this video, and I'll see you in the next one. God bless.